building an entire agentic platform that there are 6 specialized AI agents, and each agent will help you unlock growth or potential at different points of your overall lending.
Welcome to Conversation and Insights. I'm Effie Pilarinu, and today we're going to have a very hot topic discussion on Trump's proposed 10% cap on credit cards. This is not just about the cap, the level of rates. This is also about what happens in credit markets, how risk is modeled and managed. After all, credit is the oil of our contemporary economies. So we'll be discussing this, and my guest today is Shuchi Batra, a seasoned FinTech product lead with international experience. Let me welcome you, Shuchi, first of all.
Thank you. Thank you for having me.
I'm amazed how you've been from Dubai all the way to the US. You were instrumental at the Commercial Bank of Dubai in launching an AI-powered cashback card, gamified apparently, that really scaled. We'll have the opportunity to talk about that. But you also were at Credit One Bank, again, focused on their credit card portfolio. So lots of experience in that space. And more importantly, you have a very unique background. You're one of India's best-selling authors. You tell us what the topics were about. And so, that your stand-up comedy performances, storytelling, technology, FinTech, what else? What a perfect, unique combination.
Yeah, thank you. Thank you. So I have always been versatile. So studies is one part, but outside of that, I was writing when I was just 8 years old. I started scribbling my poetry. And then when I was in Dubai, I thought of just going and give it a shot to do a stand-up show. And luckily it became viral. And then people started inviting me to a couple of stand-up shows. And then after that, when I moved to the US, I thought that, okay, that was the time. Let me go and publish my book. And I write romance, poetry, prose. So it was like a unique combination in the form of diaries. So people loved that. And because of them, it made my book like one of the best-selling books of India. And
give us the link and I'll put it for our listeners to check it out. Let's go back to the big discussion around capping the level of interest rates on credit cards. Tell us a little bit, what was your initial reaction when this surfaced as a discussion? We know that the banking industry, especially the big players, are very outspoken about this, are claiming that it will translate into an economic disaster with 80% of Americans not having credit. Others have a different view and say there's going to be billions, hundreds of billions of dollars that will be saved. Tell us a little bit your first reaction and later your current thinking on this topic.
As in the US market, there are like 2 to 3 different segments of people. So anyone who has a better access or a better credit score are called like superprime, above 800 bureau score or FICO score. Anyone between 700 to 800, different banks put them together in prime, near prime. Now, anyone lower than that range is considered like subprime, or people have no bureau. So all these subprime lenders, so one of the banks that I was working with is Credit One. So over there, for these people, we used to lend only to subprime customers, and our APR used to be around 29 to 30% APR, because this is the high, like most delinquent customers. So now, if the government says that your APR can only be capped at 10%, the entire unit economics for subprime and this segment will break. There is no way that we will be able to continue the business because these people are delinquent. And any subprime lending space, if you see, if you acquire, let's say, 1 million customers in a year, by year three, 60% of them are written off. So you are actually making the money because of these revolvers, APR, late fees, and any cap to that will just break it. And then banks will have no other way to continue the funding. And if the cap is there, so then banks will not be able to give that because there is no way we can make profit with 10% APR. That would lead to lack or no access from the major banks to these customers. So that will lose. But who might win would be the pawn shops, the payday loans, who are already charging because the regulation is only on the banks for the credit cards. But now the pawn day loan shops will start giving like $300 loan. They are already at 400 to 700% APR. And now with this coming, with so much of demand, they will just keep on going excess. We can see around 1,000% APR as well. And yeah.
But Suchi, tell me something, two questions that come to mind as I listen to you. Can we safely say that FinTechs have overall increased access for this category that probably is the category that has difficulty accessing credit? And if so, have the risk modeling capabilities changed because of alternative data? Has something really dramatically improved in order to price better
Yeah.
the risk?
Yeah. So the first thing is FinTech. So FinTech are accelerating at a rapid stage because so previously what used to happen was one source of truth, your FICO score, bureau score, and the banks, the lenders will go by that. And if that is not the case, they will price it, create like internal bureau models, risk models to do the pricing. Now there are two layers. So the first is FinTech. FinTech are already very fast, and they were the first one to say bureau score is not the only source of truth.
Yes.
And now, because they are so lean, they can experiment. So they started pulling alternative lending attributes like microbuilt is one, flywheel is one, cash flow analysis has now started becoming very popular tool, because now with that, all these things, you get a better snapshot of a customer.
Okay.
So that is happening. And now the data, I think if we talk about the third party alternative data, the cash flow model has now been like, we can see in the near future, even the banks would be forced to do that, to implement that, because that will give you a overall view of a customer to better price your product.
Why aren't banks incumbents already doing that?
So the thing is that banks, they have like very legacy, very old models. And it is nearly, if we say that, oh, for cash flow model, you need to do an integration with a third party, that becomes very challenging because they were not built to do a third party integration. So that's why they just continue whatever legacy systems they have.
Yeah.
And that's why for FinTechs, it's very easy because their architecture is very modular. You can plug in, play, just remove, configurable is the name. Like that. That's why you will see that they are innovative and they can make like different decisions, even like real-time decisions, because
Yes.
they have access to all these things.
Understood. Let's talk about where AI fits in all this. Where shall we start? Shall we start with what you did back in Dubai, this AI-powered gamified card, and then maybe talk about where you see currently AI used
Yeah.
in this lending?
Yeah, yes. So let's start. So it was year 2019 in Dubai, and we did not even know the word artificial intelligence at that in time. It was not a very popular term, but somehow I created a product which now, if we see, was a part of an AI-powered gamified cashback card. So over there, the problem was the population of UAE was 9 to 10 million. That's it, 10 million people, and
Okay.
there were 52 banks. So now just imagine 52 banks fighting for the same chunk of customers, and each bank will just every week there will be a normal, like a totally different credit card. One card will say, take our credit card and you will get 5% off on your kids' school fees. Another will say 3%, you get free movies, and so on. So now there, and I'm talking about a time where there was like 2016, 2017, Bureau had just gotten into Dubai. So it was not very robust. So we were seeing like because of these fancy credit cards just appearing every week, people were just hoarding them without even understanding that how a credit card can impact their delinquency. They will not be able to, because they were, the limits are there, and then at the back of your mind you think, oh, I have 5 cards now, I have $50,000 of limit,
I have
and
more purchasing power.
yeah, more purchasing power. So then, and then in that tough market, it becomes very difficult to launch. What do you launch to attract the same set of customers? So the same day, what I one time I thought that, and then these banks have all the power, that they are the one telling, okay, these are the merchants where you will get the rewards. It was like banks telling. So now, so I thought from a customer point of view that it would be so cool that I go to a bank and I tell the bank that, see, I don't want to collect all these credit cards like Pokemon cards. These are just 5 to 6 merchants that I like, and I'm going to block this for this month. And you give cashback on just these merchants. And it was powered by your spending history, what I have been doing. So, for example, if I like going to a smoothie shop, which is not covered by your bank, and I am spending, let's say, $1,000 a month over there, and I am just like, it's a loss for me because I want rewards on that. Instead, you're giving me some random thing. So that was the design. So just imagine you start using your card for 1 month. So the credit card, our intelligence engine will understand where are you transacting, which merchants, what's your preference. The next month you come, a screen shows up and with small icons, and we tell you, oh, we see that you like going to the smoothie shop. We see you are transacting with Netflix. And then you just click on the icons and block them, and then tell, I need the rewards for these merchants. If you want to accelerate your rewards, there was a fee, but so based on the unit economics, but that was like, so it would favor the banks and it would also favor the customers. So that was, and we got Visa signed, gave us like $5 million to do a brand collaboration. We launched it over there and it was like a great product.
Amazing, amazing. Personalization,
Yes.
gamification, and obviously you were using AI to do this personalization.
Yes. So at that time, we actually built like a machine learning algorithm that would keep on seeing the transactions on a daily basis and then create a summary that, oh, these people, these are the top merchants, and this person will definitely go towards these merchants.
Interesting, very
But
interesting.
we have come a long way that with AI, it's actually AI, it's next level. So
Yeah.
currently, for example, you can use AI not only to reduce your manual task or increase your operational efficiency, because, for example, if you are onboarding a customer and there are so many steps that are manual and that requires human intervention, so there is like roughly 70 to 80% of those steps can be automated with the help of AI. That's just one part, and majority of the banks or organizations are working on that. But there is so much else you can do with AI.
Yes.
Like, yeah. So
Where are you seeing in the credit space? Now you're focused more in the US. Where are you seeing AI used and in what ways? And AI is a broad term because you were using AI, it was machine learning at the time back in Dubai more than 6 years ago, but now we have other capabilities. So what are you seeing
yes.
used, not the possibilities of what is actually happening?
Yes. So actually, loan origination, like automating the entire loan origination system, is the number one priority that a lot of banks, even the banks, credit unions, they are using. And it has started showing like those are the people who want companies to come up with these solutions that can help them specifically in mortgage, personal loans. Credit cards, it's okay because the process is already automated to the
It's
core.
digital. Yeah.
Yeah, it's easier, but for personal loans and mortgage, and then at the commercial lending side, the SMB loans, equipment financing, because currently for mortgages, the day a person starts an application till the end, it's around for 30 to 45 days. And with AI, we can reduce it to less than a week or maximum like 10 days because there is so many things that AI can do and cut down the time. So that's the number one shift we are seeing in the market. And the second is that people like the lenders, they want, okay, can AI help us in getting real time portfolio health monitoring? It should not be like, oh, after a month we ran reports, and after a month we see, oh, people have already started getting delinquent. Is there an intelligent system that can tell us the same day, oh, this person, or detect some early signals or early warnings? And
But that is more around some combination of predictive analytics
yes.
rather than something that is powered by LLMs and generative AI.
So
Uh,
generative AI. So currently I'm working with a company like called Empower. So we are building an entire agentic platform
okay.
that there are six specialized AI agents, and each agent will help you unlock like unlock growth or potential at different points of your overall lending. So we have our acquisition agent that will help automate the processes. And also, not just this, it has the capability to take your bureau score, do the cash flow analysis, synthesize it, see all the credit signals, fraud, delinquency, and tell the report and say, give it to the credit underwriter that these are the things other than your bureau score. So that's one you can do. Then the next one is engagement. So this intelligent agent can on real time see that, oh, the engagement has dropped, like this person. So we have a lot of rules, and this agent is intelligent. He just checks daily every time. Oh, this person was using your credit card like 10 times last month. And now suddenly we are seeing he has not used it. And simultaneously on your bureau, we are seeing this person is doing some inquiry. So that shows like kind of engagement
Okay.
has dropped. And that time, the agent can go and start having a conversation with the customer. Oh, would you? And because it is so intelligent, it knows what this customer likes spending on. It can generate a code and say, hey, $10 from us to you for have a Starbucks coffee. So this is just one use case. We are seeing that, and we are building like for risk modeling, also underwriting. So all these AI agents are like specialized, and they have SLM, not the large language model, but the small. Yeah. So we are building these use cases.
So would you say that a lot is happening already with the advancements in AI in these processes, especially we're talking about lending credit, that it's happening to gain efficiencies to help the businesses rather than improve the experience of the customer? Would you say that is where most of the resources, money, time, people are invested in improving that rather than customer experience?
Yeah. So now the thing is, these agents are two-sided. So the back end is helping improve the operational efficiency for the lenders, but it has a generative AI interface that keeps on talking with the customer also. For example, if I come to your website, there is an agent, he will start asking me, what's your name? What's your date of birth? What's this? And he will keep you engaged till the end of your application. So it
Okay.
is like a better application
It's a
experience.
more conversational agent.
Yeah, you can even talk to the agent. We have the voice capability. You can say, hey, my name is Shuchi Batra. or my this is this, and it feels and at each step he informs you. He's financially very fluent that it's not that, hey, connect your bank account, and the customer is thinking why they want my bank information. So he will tell you to improve your chances or to unlock better options,
Yeah.
let me have
Yeah.
a look. So that's one. And then, for example, we see the best use case would be in delinquency. Like, for example, all these customers who have no access to credit somehow got credit, and we know they do not have a flexible, like they do not have a fixed income. They need some flexibility. But currently, without AI, we always had the banks and the unions always had like a fixed blanket thing. If you are 30 days past due, they will send you some email.
Yeah.
60 days past due, collection
Yeah, a
agents.
very structured and rigid approach to delinquencies. Actually, I was reading the other day what are the rules that Klarna, the buy now, pay later provider, has in case of delinquencies. And it's also very rigid before they hand it off to collection agents. So basically, it's the classic approach. So,
Yeah.
what are you seeing now?
Now with AI, it can change. Like your AI can even detect. So what happens in banks is there is a generation of monthly reports. So for example, you missed a payment on 15th of January, but the bank will only get to know on 1st or 2nd of February when the monthly dump of data will happen. And then they will see, oh, this person is 15 days, oh, send him an email. So by the time you have already done the damage, the bank is late. So that's why they have to follow a structured approach. But what if your AI, instead of 15, on 12th would see and detect, oh, this person has not received the income. There is no way he can make the payment, and converses with you the same time and say, hey, we saw this. Do you need a change in your due date? Your due date is approaching. It might hit your bureau. Do you want me to pause a payment for this month or move your payment without any cost or at a marginal fee and move it to next month? Or do you want any repayment relief? So these people, they will also feel very supportive.
Mm.
It's not that they do not have intent to pay, but sometimes the life is
Yeah.
very challenging for these people. So
Especially if they are not in a standard employment, if they're gig workers, if they're contracts, freelancers.
and there are roughly 34% of American population who are gig workers. And our bureau scores are destined for it assumes everyone has a standard 9 to 5 job.
Yes, yes. What's it called? A W-2 form. Is that
Yeah.
what? Yes, yeah.
Yeah,
W-2 form. If you think of it, we haven't had lots of innovative products to adapt to
yeah.
the shift into the gig economy. What is your sense? What you're describing to me, the agentic flows and helping not only lenders, but also helping customers. We're talking about overcoming batch processes that are problematic and result in rigid processes. But how would regular banks and community banks adopt these agentic workflows if they haven't taken care of their data architecture, and these agents can't really access the data they need to access? It's
Yeah.
that we've got
So
it.
there
Yeah,
are two ways that I am seeing. So there are like the big banks, like for
yeah,
example, Citi, JP Morgan, Chase. There
yeah.
is no way they will let any third party
Yes,
vendors.
they'll do everything in-house. Yeah.
Yes, now there is a growing sense of employment of AI platform managers, AI product managers. They are building everything in-house because they know that AI is the future, but they will do everything on their own. Like
Yes.
Robinhood has been hiring, Square, they are doing so all.
Yeah.
But then there are smaller credit unions and smaller banks where they want an easier solution because they don't have the bandwidth to hire such experts. So those are the credit unions, and we are seeing a lot of interest, like where credit unions are preferring the fintech coming in and showing them the demo
Yeah,
that okay, how it can solve. So they are like ready to use if it is compliant. So
yeah,
compliance becomes very important factor for any fintech AI company
yeah.
to ensure that you are within the regulations.
Yeah, amazing, Suchi. Tell us now a little bit about how your storytelling muscle and mileage and experience helps you as a product lead and inspires you, or how does one expertise feed into the other?
Yeah, so I believe my work in banking has made me more analytical. So
Yeah.
that feeds into my writing. When I'm writing, I'm structured. I can easily decide, oh, this plot should come here, this people will like over here, and how storytelling feeds when I'm making like text. So over there, the way I write poetry or I write books, so that kinds of feeds into that. Okay, how do I make this pitch so engaging and so easy and digestible for a 5-year old as well? So both of these skills are very complementary.
Yeah. And Suchi, from what I understand, you are an avid user of all these AI new tools, Lovable, and what are you using mostly? Share with us in your fintech work.
Yeah, so in my fintech world, I think I my best friend is ChatGPT
Yeah.
for deep research. No, for just generating ideas, brainstorming ideas. Perplexity I use for research, and Perplexity Deep Agent for like deep research. It has access to financials, PNL, so you can do that. And Lovable is my best friend if I want to build a prototype. Last year I built like 100 plus prototypes using Lovable, and over there you can actually have an agent doing that. So with each enter it can just repeat that and update, refresh it on like full everyday basis. For example, if you want to do a product tear down, if you want to build wireframes, everything Lovable is my go-to partner. And yeah, and it has helped. Like when I'm working with engineers, the flow charts, the prototype, it's like it is so easy that they can see, visualize. So that step has also improved with these tools.
You mean the bridge or the different language
Yeah.
between business people and technologists, programmers? That has been really, that gap has narrowed because of these tools.
With like within 1 hour, I was able to build a prototype and then use that prototype, got into ChatGPT. He created a couple of user stories which you can quickly edit. And then using another AI tool, you can just feed into it and a beautiful flow chart will come, which in the past would have taken like 1 to 2 months of time, can now be done within 1 day. But yes, you have to, but the more you use, then you will understand because the prompt can go wild. So I have been doing this for last 1.5 years. So of course, with practice, the results come very much better.
Yes, I can imagine. And I myself I'm a fan, I'm a subscriber at Claude and Perplexity. I use
Yes.
the Claude a lot, but for some deep research, I use Perplexity. And over time, I built projects on Claude that I couldn't think of what to do. And continuously, I'm coming up with ideas. Oh, I could build this type of project
Yeah.
on Claude, and I've experimented a little bit with Lovable, and
Yeah.
now I'm just yesterday I started Claude
Mm.
Code, although I don't know how to code at all, but I
Yeah.
want to understand how to use it in order to understand how one builds agentic flow, starting with something simple. And
Yeah.
this is extremely powerful.
Yeah,
Uh,
so I built, like, speaking of agentic workflows, there is a company called UiPath, Crew AI. So
yeah.
I have both of them and have built so many agentic workflows where you just give, but yeah, it's a step-by-step process. You have to ensure what your agent wants. So I did want, and then using these, yes, Notion is another one. So
Yeah.
with Notion, I was able to launch and build my website in less than 2 hours,
Wow.
and amazing websites, amazing case studies. So this, I believe that yes, people keep on saying that, oh, everyone is overhyping the AI, but I believe if you work with them, with the AI tools in a structured manner, it is like really helpful to
Yes.
improve your
Yeah.
efficiency.
Yeah. The big questions are whether these tools will replace us or we will, like with the computers, increase the productivity. Who knows? That's a whole different topic. In closing, Suji, it seems that you're excited in the lending space on how to use agentic flows to help lenders and customers, especially those that are at risk, if you want, in delinquency. Is that where your focus is this year?
Yes, to help
Excellent.
more people get access to credit and help them.
That's great. And help the lenders understand how to use these tools to improve this market. Thank you very much, Suchi.